You ever see one of those headlines about a company having record earnings, and you just kind of nod along wondering what's actually going on behind that big number? Well, today we're going to pull back the curtain on that. We are going to demystify the quarterly earnings report, look right past those flashy announcements, and show you exactly how to find the real story that's hiding in the numbers. Let's dive in. So, really, how do you get the true picture of a company's health? Can you just trust that one giant profit number you see splashed all over the news? Yeah, you probably guessed it. The real story is usually buried a little bit deeper than the headlines. And to find that story, you really have to look at two different documents. On one hand, you've got the press release. Think of this as a shiny, polished story the company wants you to hear. But on the other hand, you've got something called the 10Q filing. This is the super detailed, kind of dense evidence they're legally required to file with the government. And that's where we get to check their work. To see exactly how this works in the real world, we're going to use a case study, the latest third-quarter results from the Travelers companies. Now, these guys are a huge player in the property and casualty insurance world, and they just dropped their latest numbers. So let's see what story they're telling. You know, the best way to think about all this is like a school report card. The press release, that's the summary on the front, right? It's where they show off all the A's. But the 10Q filing, that's like opening up the report card to see every single grade, all the teacher's little notes in the margins, and all the fine print. That's where the real story is. So let's start right there with that front page summary. We're going to look at the big, impressive numbers that Travelers put front and center in their press release. This is the highlight reel, the story they want everyone, investors, the media, you, to hear. And wow, what a story it is. The headline number is a massive, almost $1.9 billion in net income just for the quarter. But here's the real kicker. That's up a whopping 50% from the same time last year. I mean, that is a huge, huge jump. And it doesn't stop there. Another number investors watch like a hawk is earnings per share. And again, for Travelers, it's a fantastic number. At $8.24 per share, that is up over 52%. If you're a shareholder, this is exactly the kind of thing that makes you smile. And finally, they're highlighting their core return on equity, which came in at 22.6%. Now, what does that even mean? Well, in simple terms, it's a measure of how good the company is at making a profit with the money its shareholders have invested. The higher the number, the better, and believe me, 22.6% is a very strong result. And to wrap it all up with a nice little bow, you've got the CEO, Alan Schnitzer, giving us the official narrative. Excellent results, strong performance. So, okay, the press release tells a crystal clear story of massive success. Now, let's go find the evidence. All right, so it's time to shift gears. We're moving from the story to the evidence. We are diving headfirst into that 10Q filing, and we're starting with the official income statement. This is where we can confirm those big flashy numbers and see exactly how they got there. Okay, I know what you're thinking. A table like this, it's just a wall of numbers. It can look a little intimidating, but stick with me. Let's just look right down at the bottom line, net income. You can see it right there, $1,888 million, or $1.888 billion. It matches the press release perfectly. So check, the headline number is legit. But the real question is, how did they get to that number? You know, an income statement, when you get right down to it, it just boils down to two things. First, there's what you bring in. For this quarter, Travelers brought in total revenues of nearly $12.5 billion. That's money from insurance premiums, income from their investments, stuff like that. And the second thing is, well, what you spend to make all that money. For an insurance company, the biggest cost by far is paying out claims, plus all their other regular business expenses. And that came out to just over $10 billion. The difference between those two is your profit. Simple as that. So far, so good. So now that we've confirmed the big picture profit, the 10Q lets us do something the press release really can't. We can actually break down the business and see exactly which parts of the company this incredible growth came from. So the 10Q breaks the company up into three main parts. You've got business insurance, which, covers companies. Then there's bond and specialty, which covers more specific things like professional liability. And then there's personal insurance. That's the car and home insurance that most of us are familiar with. And right here, we can see how much money each part brought in and how much profit each one made. Looking at it visually like this makes it even clearer, right? This chart shows that when you're just looking at sheer size based on the premiums they collect, business insurance is just over half the entire company, and personal insurance is not too far behind at 40%. This gives us a really great snapshot of what their business actually looks like. But this is where the real story starts to pop.
When we compare the income, the actual profit from each segment, this year versus last year, just look at that bar on the right. Business and bond and specialty, they had good, solid growth. But personal insurance, their income more than doubled. It jumped from $384 million to over $800 million. So the question is, why?
And that brings us to the bottom line. After peeling back all those layers, the 10Q is about to reveal the one key factor, the one number that explains this absolutely incredible quarter. This is the real reason behind that 50% jump in profit.
Catastrophe losses. We're talking about the costs from major events, hurricanes, wildfires, big, nasty storms. Last year in the third quarter, travelers paid out almost $1 billion for these kinds of events. This year, get this, less than half that, at $402 million. That $500 million difference just dropped straight to the bottom line, and a huge chunk of that directly benefited that personal insurance segment we were just looking at. This massive drop in catastrophe losses gets captured perfectly in one key industry number. It's called the combined ratio. It sounds fancy, but it's just their costs divided by the premiums they brought in. If your ratio is under 100%, it means you're making a profit on your actual insurance policies. And because of that calmer weather this quarter, travelers' ratio was an excellent 87.3%. So for every single dollar they took in, they only paid out about 87 cents in claims and expenses. So there you have it. We went from the big headline story to the hard evidence, and we found the real driver. Travelers had a fantastic quarter, and now we know it's largely because they didn't have to pay out for as many major disasters. And understanding this stuff really matters, because it affects everything from the insurance premiums we all pay to the stability of the financial markets. It also leaves us with a really interesting question to think about. In a business like insurance, where your results can be so heavily influenced by the weather, how do you really separate smart management from just plain old good luck?